This is the briefing for Friday, September 1st. Monday is Labor Day in the US. It is a holiday. The markets will be closed. So the next briefing will be Tuesday evening when I send that out. Interesting development in the markets over the last 2 weeks, I would suggest. If you've been listening to the briefings, you know that we've been looking at the fractal nature of the markets, and we've been looking at the three-step counter-trend rotations and looking at different characteristics of counter-trend rotations. And basically, two of those characteristics are one, that they sometimes develop into three-step moves where leg one is equal to leg three. And typically, no matter what type of price formation they occur in, we usually see lower volume. Internals really do not strengthen that greatly. And then it leads to the potential for another move in the opposite direction or in the direction of the main trend. So basically, we've been looking at the spiders here, and you can see that this was a fairly impulsive move to the downside, going from about the 460 area, 459 area, down to about the 430 area. And then we've developed into this three-step counter-trend rotation. Now, I've talked about this. If you look, I'm not going to do this now because I've done it many times in the briefing, but if you look at this move, it was basically a three-step move in a shorter-term chart. Then we got this move, which was 3 steps, and then we got this move down for a second step, and then another move on a daily chart, bringing this to a three-step counter-trend rotation. Now, it's easy to look at volume in the spiders, and you can see volume fell off. Breadth has fallen off pretty nicely. This is S&P breadth, so it represents 500 shares, not the NYSE breadth. A little bit of a tick up in today's trading, about 166 shares. Employment numbers were out today, and initially it appeared that the market was going to take them as being bullish, but then of course we got a little bit of a reversal, closing below the low or closing below the high of yesterday. Now, keeping this in mind, this three-step counter-trend rotation in mind, I did some calculations based on where we could expect the third leg to end, assuming that this is going to be a three-step move where legs 1 and legs 3 are equal. Now, it doesn't need to be exact numbers. Sometimes it happens exactly, but other times we come into an area and then we see some type of a reversal. The alternate to that also is that we have to be aware that this three-step move could develop into something greater, and that it is basically a longer-term rotational pattern, and you can see that pretty clearly right through here. You can see the move to the upside, the downside testing 430, and then we could be going back up to test 459. So the question that faces us now is, which one is it? Are we going to test 459, 460, or are we headed back down and breaking the second leg, which comes in, this low comes in right at 435? That would then suggest that we're potentially going to see at least a move that's as great as this one, which is let's see, that's 459, 460 to about 430, so about 30 points. So that would be a pretty significant move, and really a tremendous opportunity, and it could be an even greater move than that. So we're really at a decision point right now, and that decision point is either we're going to turn down from here, or we're going to go back up and test the 459 area, and then potentially see some type of move back to the downside. As we approach 459, there's certainly a chance we could break out to the upside, and the internals should give us some indication of whether that's going to be a higher probability or not. They will strengthen. We'll need to see volume strengthening, and especially volume. And breadth is strengthening as well. Now, the other internals, and I'll get to those in just a minute, are really not strengthening. This move higher is just not showing any improvement in terms of its internal strength. Now, I did the calculations of where the three-step counter trend would end, supposing that we're looking at leg 1 being equal to leg 3. And this is a 15-minute chart of the spiders and the Qs. So the red trend line I put up is where equality is. So it's right at 449 in the spider. So you can see that we've been rotating just above that area for the last three to 4 days of trading. So watching 449 is going to be really an important area. If we were to trade below that, then that would suggest that we're going to see, or we could be at the beginning of another leg to the downside. In the Qs, the same thing. I calculated that number comes in at 376. Let me move this chart over a little bit. Comes in at 376.65. And you can see that we're really closer to that, just pausing right at that number. It's kind of unique when you do these calculations and you see how price develops, and then you put a trend line up like this and say, okay, this is where equality will be, and then the market all of a sudden just pauses right at that area. It's just pretty amazing to be able to have that type of tool in our trading toolbox. Now, in terms of the Russell, you can see that this is the Russell, and I did the same thing here, and it comes in right around the 189.70, 190 area in terms of the Russell, and it is pausing right at that. It was initially pausing just below it, now it's paused just above it. Russell showed a little more strength in today's trading than the other indices, but it's still going to be important to watch what happens going forward. Now, markets closed on Monday. It will be open on Tuesday. So this is going to be very important if this is a three-step counter trend move, and we're expecting some type of move back to the downside, then the 449 area in the spiders is really critical. That's where there was equality. And then below that is going to be this 445 area, and then below that is going to be 430. So those are the important areas right now. If, on the other hand, this is just a rotational pattern and we're going back up to test 459, then 459 resistance is really important. And if we do approach that, it's going to be important to see what the internals are doing. Now, just to be clear, if we trade through this 449 area, that's going to open up the higher probability that we are going lower. And the same thing in the Qs at 376.60 area. So watch those short-term areas carefully, and you can see it's really pretty close to the lower extreme of this area of rotation. Same thing with the spiders. That area really comes around 449.60. As opposed to 449, but I'm going to be watching the 449 area pretty closely going forward. Now, looking at the same situation with the Qs on a daily basis, you can see the three-step move here. I think I do have a trend line up. Yeah, I do have a trend line up there. So you can see that there's a possibility, once again, that this is a rotational pattern. On the other hand, breaking below 373 would suggest, once again, then that we're headed back down at least to test the low around 356. And I want to make one more comment. I'll get back to the spiders for a minute. Typically, the higher probability is if you break the low of leg 2, then that suggests that the counter trend rotation is over. So looking at that, the 434.85 area, if that's broken, that would potentially suggest then that we're going down to test 430 and potentially lower. In the NASDAQ, we're looking at really pretty close to the 356, 357 area of breaking leg 2. But once again, if you're trading on a daily basis, a swing trader or even a day trader, watch the 449 area in the spiders where there was equality, and the 376.60 area in the Qs where there was equality. That'll be your first signal that there's a move to the downside. Trading much above today's high with increased volume is going to suggest then that this is not a three-step counter trend rotation, and we're going back up to test these highs. Looking at the Russell, we're looking at basically a little bit different chart pattern. You can see the move down to test the 180 area. It was a pretty impulsive move. And then, of course, we didn't get really 3 steps to the upside. But if you eliminate this buying tail here, then you could calculate that as 3 steps. 190 is resistance and support, and it's closed right at 190 today. So it's going to be interesting to see what happens with the with the IWM going forward. A little bit of tick up in volume in the Russell, but still, if you look at it, it appears that breadth was strong, but it really wasn't. It's only 959 shares um, positive for today's trading. And the same thing with the NASDAQ. I neglected that. Only 1,000 shares positive in the NASDAQ. So really not a very strong day internally. Overbought and oversold, we are neither, basically leaning more towards overbought. You can see in the NYSE that the indicator is converged, suggesting the potential for a breakout move. So we've been paused for about 3 days. As I showed in the shorter term chart, the 15-minute chart, you can see that right through there. So breaking out either to the upside or to the downside should give us a pretty good move, and the same thing with the NASDAQ as well. Looking at total volume, you can see total volume would tick down in today's trading in the NYSE and tick down in the NASDAQ, really trending at the lower levels of what average volume would be going forward for these indices. So really not a very strong day in terms of market internals. Now, I also want to cover, I usually do this in Friday's trading or Friday's briefing, and I want to show this. These are the percentage of stocks above the 50-day moving average and the 200-day moving average. Now, this is for the S&P 500. So you can see what the trend was as we were going higher up through here. Now you can see there's the peak and there's where price was. Then we had a continuation of higher prices, but the percentage of stocks above their 50-day moving average and their 200-day moving average started declining, signaling that the market was weakening, and that led to this move to the downside. Now I want to look at this pretty carefully, because if you look at where we are in today's trading, we're at the end of today, we're at 46, let's call it 46% of stocks were trading above their 50-day moving average. But if you look at that and you look at where this is, the last time that price was at this level was right here. And you can see where the percentage of stocks above their 50-day moving average was basically right almost at 75%. And the same thing you can do with the Qs. You can see, or with the 200-day moving average. So you can see it was pretty close to about 65%. So you can see that based on where strength was here, we're not even close to being as strong internally in terms of price development that we were going back to this high right through here. So looking at the same thing with the NASDAQ, you can see the NASDAQ price level right here. It was right at trend, and you can see that how far away we are from that break in trend. Same thing with the 200-day moving average. It was right at trend, and then of course you can see where it is in today's trading. So you can see pretty clearly that the percentage of stocks above their 50 and 200-day moving averages are not even close to as strong as they were back at higher price levels, which suggests that the internal strength of this move is just really not there. And the Russell had a little bit different pattern. 50 period moving average was basically a rotational pattern, and then we broke out of it. And you can see that price was pretty much much higher than it is in today's trading, and the same thing with the percentage above the 200-day moving average. So basically, while we have a nice long weekend this weekend, the key is going to be what happens between this high today and the low of today, and or the 449 area, and the same thing. So breaking out of this area of rotation, if it happens to be to the downside, is going to open up the potential for a fairly decent move. If we break out to the upside then we're looking at the upper extremes of the longer term development of this through here. So while it is difficult to put a probability assessment on it, I think based on the internals, I'm leaning more towards the bearish indication of what's occurring in terms of price development and price structure. But I have to be aware that that can change. Now, it could have changed today with the employment numbers, but it did not. So if there's any news over the weekend, it could change the perception of value, and we could see the internal strengthen, and we could see a move back to test the most recent highs. If not, then potentially I think the higher probability, slight probability higher, is that we're going to see the potential for another rotation back to the downside. But we should know on Tuesday, I don't think we're going to see, it's going to take a lot of time for this to get worked out. I think we'll potentially see something happen next week. At least I hope so. I'd like to see a good move in the indices. Have a great weekend, a long weekend, and I will pick this back up again on Tuesday.